I'm going to do a couple of charts or examine a couple of chart setups as earnings approach in Macy's on Wednesday morning and Cisco on Wednesday afternoon after the market closes. First, let's go to Macy's, which you see on the screen right now. This is a daily chart of Macy's, and it goes back to February of 2009. So there's a lot of data on this chart, a lot of price data. And one thing that should pop out of the screen at us as soon as we look at the chart of Macy's is the series of higher lows and higher highs. And so Macy's, believe it or not, despite everything we hear about how bad the economy is and how nobody's buying anything, Macy's has been in a major uptrend for quite a while. And in fact, that uptrend started way back here in March of 09, when Macy's got clobbered with everything else, got down to about $6, $6.25, and now it's at 25.5. Now, today and last Friday, Macy's actually gapped to a new high. So Macy's, apart from what the fundamentals might be telling us about the economy and about the consumer, Macy's has extended its longer term uptrend. So it will be interesting to see on Wednesday morning, after Macy's comes out with earnings, and whatever statement the company makes about business conditions now into the end of the year, which is Christmas time, which is a big deal, and furthermore going into the first quarter of 2011, it will be important to hear what Macy's has to say. What Macy's has to say about business conditions. That is an apparel maker, that is an apparel distributor, and demand for apparel. Now, you have to understand that, well, we all understand that cotton prices have gone through the roof. So are prices going up? Is the consumer strong? We'll find out from Macy's. What does this chart tell us about what Macy's could inform us about in terms of its business conditions on Wednesday, or its forward-looking business conditions on Monday, as well as its cash position? Well, the key period in this chart is from the July lows, around $17, which is right here. All right. Let me change this to red. All right, so from 17, we have an up leg that's had its own series of higher lows and higher highs. And that's created a channel in Macy's. If I drew the channel less cockeyed, let's draw it like that. All right, get rid of this parallel line. We'll put in a new parallel line and see where that takes us. All right, right in there. All right, so somewhere in the vicinity of $27, $26.80, $27, Macy's will hit this top line, the parallel line, right around $26.70, $26.90, somewhere in there. Now, if Macy's goes sideways tomorrow, which it conceivably could, or messes around between $25.80 and $25.20, closes right around where it is now, $25.50, and goes to 26, for argument's sake, $26.80 on earnings, it will move up 5%, which is a pretty sizable move. Especially, look at where it is in relation to where it has been. So Macy's will continue to make new highs based on this chart is telling us that Macy's has higher highs left in it. But supposing Macy's really comes in with blowout earnings and takes out $27, then what? Well, you have the top channel line of the nearly 2-year channel And that could take Macy's up to eventually, not necessarily right after earnings, but eventually up into the 28.80, 29.5 area for Macy's. So let's notice that momentum has not made a new high yet, but it's still pointed up, right? And so I suspect that if Macy's goes to 26.60, 26.80, and then pulls back, this momentum will not make a new high, and that will be a warning that Macy's needs a rest. Okay, so if momentum down here and RSI, so Macy's goes like this and then starts to pull back, and momentum rolls over, then I think Macy's will have completed this uplift. And that means that it will have gone from 17 in mid-July, late July, to somewhere around $27. Right now, on a percentage basis, that is a move of 59% in Macy's. Clearly, it's outperforming the S&P and most every other category. And guess what? This has nothing to do with QE2. Nothing to do with the commodity move. Nothing to do with the lower dollar. If anything, Macy's will incur higher costs down the road, which may be a function of its statement after earnings, and may say that they'll have a problem because their margins will get squeezed as a result of higher cotton prices, higher costs being raw material costs being passed on from manufacturer to Macy's, and Macy's having a problem passing it on to you and me because we're just not going to pay it. We're too busy trying to figure out how to pay our mortgages. All right? So, this is a very important, almost litmus test for the retail sector, especially the apparel sector coming up. Because Macy's is a big department store, services a lot of people, has its corporate headquarters in Manhattan. And if Macy's has sort of a lukewarm, forward-looking business prospect, then I think the retail sector, we can sort of figure that this up move, this entire up move, 4 months worth, will be coming to an end. All right, that's Macy's.